Folks, sorry I'm late. Welcome to another Thursday night. What we're going to talk about tonight is CRWD. Their earnings, phenomenal, really good earnings. We did a strangle trade on CRWD, meaning it's an options trade. If you're not familiar, selling a strangle is to sell, in our case anyway, a deep out of the money call and a deep out of the money put, and you hope that it closes out by expiration in between those two price points. We're going to talk about that in a moment. Also, gold, silver, is the rally over? Today, gold was clobbered, broke 1900 and never looked back. Horrible day for the gold stocks. Horrible day for silver and the silver stocks. Are we going into a new bear market? We'll talk about that. But first, let's talk about our sponsor, which is the folks over at TrendSpider. Folks, automate your grunt work by using TrendSpider's algorithm, speed up your technical analysis, and improve your accuracy at the same time. No sense in speeding up your analysis if you're not going to improve your accuracy. I'm going to be using TrendSpider later on. I'm going to show you how I use it, how I use the alerts, and how I also use the automated trend lines, and allows me to go through a lot of charts like this. Reduce costly analytical mistakes and time your trades with precision by using their alerts, and find winning chart setups with their scanners. When it comes to scanners, I've built scanners before. Frankly, I'm a little bit intimidated by them. The good part about TrendSpider, they're already built. So I just take theirs, I modify them, a little tweak here, and I roll them out. I rename it. I pretend they're my own. Nobody calls me out about it. So that's good stuff too. All right, so use the link below. 35% discount. I don't know if they still have their other. They do. Their 45% extended Memorial Day sale is still on. Use the link below. Don't use my discount code. That's only 35%. They're giving you 45%. Let's get to it. Let's first say hello. Let's be sociable. Who do we have on? Franklin. Evening, and it's showtime. Yeah, brother. John Spencer, oil to 80? Probably. We'll take a look at it, but probably yes. That will slow people spending short term. Yeah, but you need to get easily over $100 a barrel before it really begins to take the wind out of people's sails. And don't forget also, you have a lot more fuel efficient cars out there now. EVs, small fraction of the world's fleet of vehicles, so that wouldn't help all that much. But in terms of fuel efficiency, since the last time we've seen oil at these levels, cars have come a long way. Tommy, the nose goblin. Bob, you rock. Happy Thursday. You rock too, pal. Thanks for joining in. Matt Carter, smash the like button. Yes, please, smash the like button. I'm a horrible YouTuber. I forget that every week. Good evening from the Smoky Mountains. Bob, I'm bullish. Good for you. RL, happy pre-weekend to all. Same to you, my friend. Pat, hey, Bob, been killing it this week. Good for you. What have you been trading? McCarter, Bob, U.S. dollar was moving, huh? Yeah, I think it's a short covering rally. I think that the news out of Russia this morning that they would divest dollars out of their sovereign wealth fund and put those monies into the euro and the yen. I think that they used the the ADP jobs data this morning to use that as an excuse to pop the U.S. dollar higher. Yeah, a nice rally. I don't think it's going to last. Falcon, hey, brother. All right, let's do this. So today, the world's we're being isolated. If you can't tell by now, the more we learn. I'm not even going to get into the disease. I'm not allowed to say it on YouTube. The more we learn about that and what's coming out of Washington, then you look at the attacks on our infrastructure. The Colonial Pipeline, now JBS meets. I mean, these are the actual war. Our infrastructure is being attacked. So more on that to come in the coming days. And I may not be able to talk about it on YouTube, so I got to be careful. All right, let's get to CRWD. So CRWD, CrowdStrike, we sold, what did we sell? What was our strikes? We sold to open the 240 calls and the 197 puts. So we're down here. You can't even see the 197.5 puts options. We sold those for a premium. We collected the cash. We didn't buy them. We're the casino, not the gambler. And we sold deep out of the money calls. This should expire worthless, and we should pocket 100% of that premium. A fairly lackluster price action after hours, but I got to tell you, the earnings out of CrowdStrike, I'm a buyer. I mean, I was hoping that for whatever reason they would knock the shares down and have them assigned to me. But if you take a look at their earnings report, they beat. I won't go crazy. There's too many articles out here. Here, maybe this is it. CrowdStrike. That's Q2. Where's Q1? Q2 improved outlook, and here we go. Q1. EPS 10 cents, beat by 4 cents, huge beat. Sales, this is what I watch. I don't care about EPS. They play with that number. I care about sales, and sales beat. So why we're not seeing a big move higher, especially on a stock like CrowdStrike, which is an internet security, not quite sure, but we're going to take advantage of it. We already have. We're going to continue to take advantage of it. You remember, going into the week, this is one of our watch stocks. So we did execute on this trade, and more to come. We are going to be following CrowdStrike very, very carefully. No doubt part of our portfolio fairly soon. So good numbers, good price action. It appears to be a good trade. The market hasn't opened. We don't know whether or not we're going to get a surprise to the upside or the downside. But at current, we're very, very positive on the probability of profit for our CRWD strangle trade. Let's talk a bit about gold. Now, I saw on Twitter, and this is a misnomer, a young lady, I was going to reply back, but I'm not big into tweeting. She said that her tweet was, silver doesn't like strong dollar and gold doesn't like strong yields. And she's right. She's right. But I think she's missing a bigger point, and she's not using history as a guide. And that's what I plan on doing tonight, to talk about the price action today. Are we going into a new bear market on gold and silver? No. The bull market has only just begun. I'm going to show you the charts in a moment. So let's take a look at the yearly chart of gold. Digest it for a moment. This line here is the 10-year yield. Now remember what she said. Gold doesn't like rising 10-year yield. Is that true? Yes and no. Since the dot-com bust back here, there has been a clear divergence of the 10-year yield and the price of gold, which is in candlestick. Gold has gone on a rip-roaring tear, while the Federal Reserve has been active with QE after QE after QE, rate cut after rate cut after rate cut. And so her point of late, with all the activity out of the Federal Reserve and the lack of announced inflation, has allowed for yields to stay low and for gold to rip up a lot higher, consolidate after a big bull run. Now we have taken out August of last year all-time highs. So why do I believe that the correlation between the 10-year yield and gold is going to grow tighter? Well, you got to go back in history, and you can go back here. It goes back as far on the 10-year yield to 1962. That's when they first started tracking on this chart anyway, the 10-year yield. On gold, this chart begins in 1970. The following year, 1971, was a critical year. Why? There was the end of the Bretton Woods Agreement. The U.S. went off the gold standard. And the U.S. dollar went this way. Inflation went this way. Yields went up along with gold. They were tightly correlated until ultimately in 1981, Paul Volcker was able to break the back of inflation. And even thereafter, they traded down together for a while through to 2000. So what we want to do is we want to take the equation of having really like negative inflation, real inflation, and substitute that now with positive inflation. That's going to allow for yields because the market's going to demand more premium, or else the Federal Reserve has to be the only buyer. And that's quite possible. But right now, the bond market is telling us we need more premium to buy your bonds. You're a high risk. So, Allah, what did Russia do today? They're no longer invested, at least their sovereign wealth fund is no longer invested in US dollars or in yen and euro. So, this is example number one of, yes, the 10-year yield and gold can trade in tandem when the environment is right. Just like gold and the US dollar can trade in tandem when the environment is right. When might that environment be? Geopolitical risk. Whenever you see heightened fear, you'll see the dollar, money rotate out of stocks into the dollar and into gold and into bonds. So that's when those two can trade in tandem, gold, dollar. But here's the big macro picture. Everybody's betting that yields are going to break out and it's going to drop gold like a bad habit. Ain't going to happen. And I'll tell you why in a moment. Take a look at this next chart. We'll come back to this one. This chart here. This is M2 money supply. This is from the Federal Reserve. And this is the measure of dollars. This is a weekly number. I'm kind of messing with you right now. This is a weekly number. And you could see how we have just skyrocketed all the way through to February, the week of February the 1st. Wait a minute. This is June. This is June. Why is there no data after the week of February the 1st? This series will no longer be updated. More information available in the notes below in the graph, blah, 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 blah. They stopped reporting. This was reported on a weekly basis. Now, we don't get that data any longer. So I'll copy and paste this so you folks can read this at your leisure. Now, what do we want to do now? What's the logical thing to do? Is first we want to ask ourselves the question, since they stopped reporting M2 money supply, how confident are we that M2 money supply has rallied even further than the last report? I would say 1,001%. That we have more money in circulation vis-a-vis stimmy check after stimmy check, new COVID plan, $1 trillion here, $1.9 trillion there, $6 trillion over the past several months. Do we think that this is higher or lower than we are right now? So let's go by the assumption that, well, of course, it's higher. So what we want to do is let's print up M2 money supply and let's see, is there a correlation between M2 money supply and gold? Simple as that. So here's M2 in candlestick. Let's make this gold and this gold. Raise this up. Put this behind. The correlation on a yearly time frame for gold and M2 money supply is they trade in tandem 83% of the time. Here is the price action of gold relative to M2 money supply. So if we believe, and this is as of February, incredible. If we believe that this number has gone up higher, along with, this is an updated number, along with the Fed's total assets on their books, which was reported, I think yesterday, at a new all-time high of just shy of $8 trillion. The day of the drop of Lehman, the bankruptcy of Lehman, the size of the Federal Reserve's balance sheet was $800 billion, not even $1 trillion. Now it stands at roughly $8 trillion. So if we want to go back and re-ask that question, do we believe that gold is going higher from here? I think absolutely yes. So what we're seeing is a short-term blip on the screen for gold, and in all probability, we are going to press up a lot higher. So that's my thesis. I'm sticking to it. Drop the dollar, run for gold, and inflation, pay off debt. Well, let your debt, if the dollar drops, well, you're in New Zealand. But if your debt's denominated in U.S. dollars, inflate it away. That's what we're going to do with our debt. All right, let's take a look at the weekly charts. We'll scroll through these quickly. This is not weekly. How dare you not be prepared for your show? Sorry about this. Where's my producer? Things aren't ready. All right, let's begin with the 10-year yield. Now, let's get something out of the way right now. I'm long of silver. I'm big time long of the gold stocks, big time long of silver stocks. It does not, given the recency bias of the inverse relationship of yields to gold, I do not feel wonderful that we have broken out on the week. The 10-year yield has broken out on the week. It's undeniable. We have one trading day left to go. A lot can happen. We want to be open-minded, but the probability highly favors a continuation move higher on the 10-year yield. The question is that when the dollar ultimately begins to roll over, at what point do people realize, or traders realize, that the Federal Reserve not only won't raise rates, they can't raise rates. For whatever reason, that has not been factored in yet. When we get inflation reports out and they're hot, what do? Traders automatically dump gold and buy the dollar. Why? Why? That's insanity. You should be buying gold because the dollar is going to drop back. It's going to melt away due to inflation. They don't get it yet. So it's a matter of hunkering down, biding time, and waiting for historical norms to return. The TLT, 20-year bond ETF, down on the week, holding support. Not out yet. Volume to the downside light on the week. Here's another view of the 10-year yield. Consolidating nicely. Tips hammered this week. Why? Yields broke out. Traders dump tips because they think, oh, why do I need tips? Yields are rising. The Federal Reserve is going to raise rates and they're going to fight inflation. No, they're not. They're not going to do that. The reason why they're not going to do it is that they raise rates, they even hint at it, if they even talk about it. If they do anything other than say that we're going to talk about, thinking about, and planning a meeting 2 years out about raising rates, the stock market's going to drop. The polls for the Democrats going into the midterm elections are already bad. You get a stock market crash, it's a wipeout. Janet Yellen is no conservative. She will not allow it to happen. The U.S. dollar, updated for the third, good. A respectable bar. I even put a line from last week connecting a possible higher low on the U.S. dollar. We identified it. We had a doji star formation last week, or a spinning top formation. Call it a cupcake. It doesn't matter. All it is was an indecision week. This week, we pulled back, no new weekly high. We moved forward. We had the news behind us. They had to wipe that Russian news off the front page that was bothering people. All of a sudden, dollar ripping, yada, yada, yada. Are we going up higher? RSI looks good. One trading day left to go. Let's take a look at a daily chart. Daily Stokes look good. RSI looks good. We may get higher highs here. 90.75, stiff resistance. The Dollar Bull ETF, I'm not going to bore you with it. Good volume today. We're probably going to get another move higher. Don't forget, tomorrow morning, jobs data, 8:30 a.m. Eastern Standard Time. The VIX, weekly time frame, up on the week. Can't close above 20. Can't hold its mud. Up over 6.5%. Stokes are rolling over. One trading day left to go. The Dow Transports under a lot of pressure. Today there was a lot of damage done to this market in that the Dow, let's go to a daily chart. Before we go to the daily chart, let's talk volume. Volume light. Daily chart, we broke down today. We had broken out back here on the 27th, consolidated, then faded. Broke down below support today. The Dow Jones, we have a breakout on the week. We are up on the week. We have broken out above resistance. Do we stay there? I don't know. Daily chart. Horrible, horrible price action. I mean, take a look at all these indecision bars. I've been going over this with numbers for the past several days, that the price action on not just the Dow, on the S&P 500, IWM, small caps, was all piss poor. Horrible price action, and today we broke. We held the 20-period moving average. Volume was light. I doubt they're going to break it on a Friday. Usually you get a short covering Friday ahead of the weekends, especially in the summer. S&P 500 struggling for a weekly breakout here. The Stokes still look good. RSI still looks good. They're holding trend. Daily chart. Not quite an outside reversal bar today, but close enough for government work. This is not a week. This is not a daily chart. Let's get rid of this. Here we go. We broke support. We had broken out back here on the 27th. This is a bull trap, a breakout point failure. We broke out and we gave it back. Lower highs on RSI. This is a market that's weakening up. Volume rose, but still below average. We're not seeing institutional buying. We're not seeing institutional selling. IWM, weekly chart, still up on the week. I have a short position here. Still up on the week. Stokes are rising. Volume to the upside is going to roll in light if we do close up. Daily chart. We dropped down today, bounced off the lows. No breakout. We've been in this trading range for a long time now. Volume rose, but still below average. The TZA. Oh, this is our short vehicle. There's no need to go over this. Qs. We're short of Qs. If yields if yields continue higher, the Qs are going to break. Tech stocks do not work well in a rising interest rate environment. So, very concerning for the Qs to see yields breaking out on a weekly time frame. That being said, you are seeing your stochastics on a weekly time frame hook up with a higher low. It's pretty bullish. Down volume this week is virtually non-existent. I think that traders are waiting for that jobs data report. Look at this breakout point failure. We broke out here on the 25th, failed to hold it. Breakout point failure. Lower highs in RSI. If we get a strong jobs data tomorrow, expect weakness on the Qs as yields move up higher. The banks, loving the banks. We have a weekly breakout. Yields are rising. What do banks love? Rising yields. Volume, not wonderful. Daily chart. Up 0.25% on the day. A little bit of a fade off the highs. Volume is very good. Very good volume. Above average. This is what you want to see. Institutions buying. Technology. Very much like the Qs. Weak on the week. Pardon the pun. Higher lows on Stokes. Jury's out. Volume light. You don't know what's going to happen here. The semis, reversal bar on the week. Very close to all-time highs. Loving the Stokes. Rising, higher lows. Momentum is behind the shares. Volume very light to the downside. Not horrible. Daily chart. Daily chart coming into that 50-day moving average. Stokes rolling over. Many times when you get your Stokes that roll over, they'll roll over and then hook right back up again. Like back here, roll over, hook up. Like here, roll over, hook up. Like back here, roll over, hook up. So I'm not worried yet about the Stokes rolling over. LABU, down another 3.25% on the week. I thought this was going to be a good week for the biotechs. It still may be. Daily chart. Love the RSI. Yeah, I'm liking this. LAB is looking good. Because what we have here is what I humbly believe to be I'm going to call it a bull flag setup. The way I drew it looks like a pennant. I think we're breaking out on LABU. Franklin, if you're still watching, strangle trade. Strangle trade. I think that we're going to stagger that strangle trade by selling first a deep out of the money put. Then if we're right and it breaks out, then we'll take advantage of the increased implied volatility on the call side, then sell a deep out of the money call on strength. Consumer discretionaries weekly chart, horrible. 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 Take our crayon out. Let's memorialize it. The line in blue is the S&P 500. You can see they trade pretty much in tandem. We break and close down below 165. It's all over for consumer discretionaries. R-Train, hi Bob. Is GS on the overbought side? We'll take a look at it for you. Let me just get through these weekly charts before I lose my focus, and we'll take a look at some chart requests. Yeah, take a look at this. We had broken down on the first, just barely. Then I got a continuation breakdown yesterday, follow through today. Consumer discretionary is not looking good. On volume, they're moving down, no less. Energy, really good week, man. Big breakout. Horrible volume. Daily chart. Nice breakout. Good volume these past couple of days. Oil. Who asked about oil? That was John, I think, right? Let's bring up West Texas. That's light sweet. All right, so John's question was, do we see $80 a barrel? I think it's a foregone conclusion. $80 a barrel is right up here. We have our momentum indicators moving higher. Stokes moving higher. We can dress this up a little bit to identify our resistance levels. This week, assuming that we close where we close today or better, we have a breakout above resistance. Next stop is $77.50. Rock solid trend here. Here's a quarterly chart along with gold. I remember doing this chart, and the correlation between gold up here and oil is a mixed bag, but there are times where they trade like from 2000 up through 2011 pretty much in lockstep. Yeah, you had your blips on the screen, but you have gold, which has been outperforming oil for the past couple of years. So oil is looking good. Gold, to me, is looking better, even though we had a down day today. No big deal. Emerging markets. Okay. The next phase of our strategy with the reflation trade, the inflation trade, I'm not going to be hyperbolic. I'm not going to say hyperinflation. Most guys that want to get you to click, they'll type hyperinflation. I'm not going to do that. We're not there yet. Hyperinflation is a completely different animal. People that just throw that term around have no idea what it is. We have inflation. We have a dollar that had a good day today, okay day yesterday. It's not going to last. It's just not going to last. And what you want to take advantage of is any pullback on emerging markets, whether it be the EDC. I don't love the EDC. Why? Glad you asked. It's because 30% of the EDC is China. I don't like that. I would rather play the emerging market trade vis-a-vis who benefits from the supply chain shift out of China and into other developing countries. Who are those countries? My two favorite? India, Vietnam. Here's VNM. Doing beautifully. Really, really good. EPI, this is a Wisdom Tree India ETF. They had a rough time here due to all the COVID cases. They're getting it under control. I think this is an all-time high. Yep, all-time high. Gold. All right, weekly chart. I'm not going to lie. It's not a good chart. Down over 1.5%. I think this takes us negative on the year, in fact. Yeah. Today's price action took us negative on the year. Volume to the downside of the week is very light. Daily chart. I'm not getting the feeling here, and I've been through a bunch of them. I'm not getting the feeling here that we're seeing a big correction set up. So much so that I bought more gold mining stocks this morning on that big sell-off early on. So I'm buying the dips here, and we'll sell covered calls. We have covered calls going out on NUGT, 90 strike, which we're profitable on. They expire on the 25th. So we'll continue to sell deep out of the money, covered calls. And if we get a pullback, we generate cash flow, turn a negative into a positive. So I'm not saying that simply because I added more today that we're done going down. Honestly, when I pulled the trigger, I expected a decent bounce. We got a bounce, but there wasn't a ton of momentum behind it. There was more selling behind it. So I was disappointed, but longer term, still very, very bullish. GDXJ, outside reversal bar today. Normally, you should expect to see lower lows. I think what's going to happen here is that we may get a new lower low. But when you take a look at these Stokes, I want to take you back through history where you get overextended, you roll over, then you hook back up. Didn't work out well here. But in prior times it has, where you roll over, hook back up, you regain your momentum, and you proceed up higher. Why? Because traders are waking up to the reality. Inflation's here. It's here. We're not waiting for it anymore. It was for the longest time, speculation that we would get inflation. The Federal Reserve would deny that it's here. They used to say we have a price target of 2% inflation. That all changed about a year ago till they went to, we want an average of 2% inflation. I They showed their cards. So now they admit that there's inflation. So why gold wouldn't go up higher is beyond me. What else do we have? Silver. Oh, this is the silver miners. We're along with the silver miners. Reversal bar on the week. One trading day left to go. Big volume on the week. Not happy about that. Silver down over 3.75% on the week. Holding support. Bounce. How much time do we have? We got plenty of time. This is not. Okay, this makes sense. Okay. Nice inside day yesterday. I thought that we were going to get a follow through to the upside. Didn't happen. We gapped down, held support. I'm not buying any more right now, but soon. Let's do some chart requests. Let me go to the members area. All right. Let me write down who's got what. We have 15 minutes. Happy pre-weekend. BB. BB for Pat. SNDL for McCarter. I'm trying not to miss anybody. Apple. Etsy. Goldman. XOM. All right. I'm going to shut it down at that. We have a bunch to go through. Let's do it. Let's bring up our friends over at TrendSpider. For those just joining in, don't forget, link below, 45% off this week for their Memorial Day sale. Don't use my discount code. Just go to their website and log out through them. Use the link below. Just don't use the discount code. They'll credit you on the other end. All right. BB. Well, we went over this one. I think it was yesterday. We knew it was going to come in. It got a little bit extended. It's a good-looking chart. It did come in. This is a weekly time frame. I like the 1409 mark. Daily chart. And we hit it today. I even got my alert that fired off. So we were talking about this last night. I said, identify your support level. 1409 is the mark. We set an alert. It seemed like a long shot. What did it do? It hit it. That's why you got to use alerts. I had no intention of trading it, so that's why I didn't pay heed to the alert. I need to be able to sleep at night. All right, so I don't think we're done with pain here. I think we could bounce around here at the 14 online level. You may want to set an alert here yet again. Touch, bounce, breakthrough. And there you go. So I personally would not buy this stock. It's not my cup of tea. When I was a kid, I would have. I would have been diamond hands all the way. SNDL, Sundial Growers, weed stock. Very nice. Very, very nice. So we have broken out this week above a bunch of moving averages. Volume is very good. Huge, huge consolidation. Higher lows, exactly what you want to see. Daily chart. All right, so we ripped today. You got a reversal bar. We still closed up on the day. I think that what you might want to do is this. Is $1.14, $1.15 would be a fill of the gap. What you might want to do is also set up an alert down here. This is an automated trend line. Watch. I'm going to take it off. Now I'm going to put it back on. This is automated technical analysis. You may, just may, long shot, just like that support level getting hit on BlackBerry was a long shot. The long shot, if I wanted to get long, would have paid off. So what I would like to see here is, just as you had a ruthless rally up today, is a vicious sell-off in the coming days to do a retest or a filling of the gap. You may, just may, get an overshoot to the downside to retest this rising lower band of support. So keep a little bit of sensitivity on there, because it may not hit exact. But if you get in that neighborhood, you're going to be awful happy to buy at that support level. It may not. It's probably not going to spend much time down there. Now, this note just tells me, listen, there's one above, an alert above here that looks good, but this is sexy. That's what I really want. I would not chase the stock. That note just lets me know, hey, listen, don't fall too in love with it. There's a better support level below. And that's my take. What else we have? Apple. I looked at Apple yesterday. It looked pretty good. Ooh, ooh. So the reason why I liked Apple last night was because we had been respecting this. This is a weekly chart. We've been respecting the lower band of support for several weeks, and we'd rallied off of it. We may still rally off of it. One trading day left to go. But at current, we have broken support. Therefore, no way, can't buy it. Don't do it. Yeah, man. I would avoid. You may get a retest, a back test, meaning a rally back tomorrow. Don't let it lure you in to a false sense of security. if you get that rally. Many times the stock will break down only the next day, spend a couple of days of flirting with a recapture of prior support. Most times it fails. So let the other guy get lured in. It doesn't matter where stock trades intraday. What matters is where it closes. And if they're unable to close it back above 125 per share, avoid it. Move on. Because if anything, here's a monthly chart. We're flirting with a monthly breakdown on Apple, and it becomes a short. And it could drop to as far as, here, I'll go with the automated trend line in red. And that's down at around, it's rising. I don't know when it's going to get there. If it does get there, 110, 115 per share in that neighborhood. So what you want to do is tomorrow, if you're entertaining a buy here, make sure you close back above 125 per share. Where do we close today? 123.54. The one good thing about this chart is that your down volume bars have been declining dramatically. This is what? 1, 2, 3, 4, 5, 6 weeks in a row, down action. Etsy. No likey. Automatically, the first thing I look at is the trend, and that's why we go to the weekly charts first, is to identify trend. Then we go to the daily charts, and you're clearly putting in lower highs, and you have lower lows. We're breaking down. So to me, I look at this chart here, I see a natural support level at the 50-period moving average. So I do one of these, and I make an assumption. And that assumption is that this is a bear flag setup, and we're going to have a resumption to the downside. Why? Why am I so pessimistic with that view? It's because weak stocks tend to get weaker, strong stocks tend to get stronger. This is a weak stock. The probabilities are in your favor that the shares go lower. I would avoid. Daily chart. All right, so the daily chart is not horrible. We broke out here on the 26th of May, retest, very, very nice, textbook. We broke out, then we dropped back down. This is a watch to me. I wouldn't short it. I wouldn't buy it either. I want to make sure, and here's the value of the automated trend lines. I drew the one in red, I think. Yeah, I drew the one in red. So if I didn't have that line there, you'd have the automated trend lines available to you to show you support. If we fail to hold these support levels, it becomes a short. So, in fact, it's a sexy short at that, because I love shorting bear flag setups. It's a continuation pattern, and it's a continuation to the downside. So I would avoid to the long side, entertain, watch to the short side, but I would not short right now. Too much risk, not enough reward. You want to short the break. Goldman Sachs. Is Goldman Sachs overbought? That's a relative term. We'll begin with the weekly chart. Weekly chart, RSI 78 for a mega cap stock. Yeah, it's overbought, but it's a weekly time frame and it can go higher. The key here is to identify where it is relative to a couple of points. One, the base from which it broke out. We're not that far away. Two, the distance between where we're trading, and its rising moving averages. Pick one, doesn't matter. What do I have up here? The 50 period? At Keltner channels at 20 period. I have an exponential 21 period moving average. You could use that. Look back in history. Take note of where it is relative to its rising 21 period moving average, exponential, and use that as a guide. We are above the Keltner channel, but that doesn't mean it can't go higher. I really don't like the phrase overbought, oversold, because people use it way too glibly, and they shouldn't. And here's the value of automated trend lines. Watch this. Click of a button. You got resistance above. And note where we faded, just shy of it today. So when I buy Goldman Sachs here, I wouldn't not buy it because it's quote unquote overbought. Strong stocks tend to get stronger, even if they're overbought. You have RSI above 70, at current about 72. It can go higher. The problem to me more so is the fact that I know now that I have a rising resistance bar above. So to buy here, only to know that I have resistance immediately above, kills my risk reward. So I can't buy the stock, not because it's overbought, quote unquote, but because it's right up and into a resistance level. Where I would look to entertain getting long is right down here. You get a market shakeout, a filling of the gap, 374.06. We'll keep quite a bit of sensitivity here. We'll keep this active for a month. That's Goldman. Just beware of that resistance level above. What else do we have? Exxon. This will be the last chart of the night. Lose my voice. All right, so Exxon, energy sector. When I think of Exxon, I think of our fellow member Norris. Norris, if you're out there, hello, my friend. He is loaded up with Exxon. So for his benefit, I want to be bullish. And I am bullish. We do have, again, I'm going to illustrate resistance levels above. I have my manually drawn one. TrendSpider's picking up two more above. Just beware. Would I not buy because of that? No, you can nibble here. You have a little bit of space between here and that resistance level. If you see the US dollar roll up, sorry for hitting the mic if that made a noise. If you see the US dollar roll over, oil shoot up, expect a breakout on ExxonMobil, because the energy stocks and oil trade lockstep up and down with each other. Good breakout today on ExxonMobil. We're bullish on ExxonMobil. And with that, folks, Elite Trader, you're late. No worries, my friend. Catch it on the replay. All right, for Paul, longtime viewer, I cannot not go over Paul. X has been quiet of late. We have a weekly breakdown on ExxonMobil. Excuse me. Sorry, folks. It's getting late. I'm fading. And I was wrong. I was looking at this bar here. We have a weekly breakout last week. This week, it's a retest of the breakout point. Paul, I'm glad you brought this one up. I like this chart. Even though it's a down week, all down weeks are not made alike, right? You get a breakout, you want the pullback. You want a down week. You want to see a retest of what was resistance, now act as support. Traders are OCD. I know, I have it. So this is what I want to see. It makes me sleep well at night. Daily chart. We are in, I'm going to take the automated trend lines off. This is the time saver. We are in a trading range. So what I would do here, I think this is going to get resolved to the upside. I don't want any sensitivity. All I care about is a close above. Excuse me, wrong. Got it. We bounced right off of support today. You know, this triangle formation still leaves the possibility of another retest of support. So if we get a weak morning tomorrow morning, you may get an opportunity to enter the trade. But if it fails, or it breaks down below support, you're going to want to get out quickly. That's the game plan. X looking good. Alcoa, not so good. A lot of price action above, a lot of resistance above here on Alcoa. You can't buy it. It's at resistance. That's the discipline. You got to walk away. Weekly chart. You got to walk away. I think you need to see a retrace all the way back down to one or both of these support levels. So what I do like to do is I don't want to set it there. I wanted to use the automated trend line. Okay, better. I want to keep my sensitivity pretty loose, pretty wide. So that way I can capture a retest of the breakout point and a retest of support. Since it's a weekly chart, we'll keep it active for 17 days. Good in numbers, any. Wait for the pullback on Alcoa. And the reason why I say wait for the pullback is when you go to a daily chart, we broke down yesterday. Again, the power of the automated trend line, right? Now, you don't see it here. Click the button. There you have it. There's your breakdown. Avoid it right now. Let it come to you. And with that, folks, hey, Franklin, thanks, man. Yeah, please smash the like button, folks. It really helps me out with the YouTube algorithm. I appreciate you being here. Have a profitable trading day tomorrow. Have a great weekend. Subscribe to the channel. And don't forget, TrendSpider, 45% discount code. That's probably going to end by the end of business tomorrow. And what else? I give TrendSpider away free to our silver and gold level members. Join up, 14-day free trial offer. And until tomorrow, members, I'll bid you a fond adieu. Have a great night. Be well.